Hi everyone, welcome to Buffett and Beyond Research Stock of the Week, and today we're going over Broadcom with new numbers, this new Broadcom semiconductor for November 23rd, 2024, and yeah, this stock is up over 400% over the past 5 years, so let's get right to it. All right, now let's take a new look at some of the new numbers from Broadcom. And one of the things we want to show you is that 2024 has been a tough year for this company, and it has been for the entire index. And I'm talking about the semiconductor index, as we're going to see in a minute. So you can see that the net income was at record levels in 2023 at $3.30. Then it fell this year to $1.02. And now it's projected for 2025 back on track for new highs or a new level for net income. And that takes that clean surplus return on equity, as so many companies have had trouble in 2024. And now we're back up above our 20% level, at least on the 5-year averages, as we showed in the previous chart. Now, the retention rate is 40.7%, and this company's making a lot of money, and we like to see retention rate of 100%, or at least 80 to 100%, and this is retention rate of 40%, but they make serious money. And what they've done with some of that money is pay off their debt, or part of their debt, because this was twice as high as last time, or just about 4 or 5 months ago, last time we went over this stock. Now, down here, we are looking at, and this is part of the new computer program, which is not out yet, so give it a week or two, and we are looking at the ETFs, and we're looking at the XLK. In other words, what stock or what ETFs is this stock Broadcom in? XLK, it's in the tech industry, or the tech ETF. XSD, it's in the semiconductor ETF, and it's also in the QQQs, which represents the NASDAQ 100, or the top NASDAQ 100 stocks. By the way, we have a portfolio in our ETF letter that we picked 12 out of that 100 stocks, and it's doubling the S&P as of right now, as I'm speaking. And it has a small dividend of 1.2%, but that's okay because it's putting a lot of money back into itself. Retention rate only 40%, and that's probably the only thing that we're looking at that we don't care about Broadcom. Everything else is fine. Now let's look at the past 1 year. Black line is the S&P 500, up about 30%, a little over 30%. Now this is 12 months, and Broadcom is up about 67, 68% in that time. So it's more than doubling by a tad, but more than doubling the S&P 500. And those are the kind of stocks that we want to see in our portfolio. Let's go to 5 years, and with the S&P 500 up about 91%. This stock is up about 420%. So that's pretty good for a stock, folks. And remember, what clean surplus is all about is that it identifies the above average stocks and identifies the below average stocks. And every ETF, every portfolio, every mutual fund has above average stocks in it, and they also have below average stocks in it. And that's what people have trouble with, is that they have a lot of the below average performing stocks in their portfolios because they're names that we probably grew up with and that are good. We look at Coke and Pepsi, which is not outperforming the S&P 500 anymore, but they're still good stocks. The thing is that we want to be able to outperform the S&P 500 index all the time. So you want to pick the above average stocks. So Coke and Pepsi are not in our portfolio, but stocks like Broadcom and NVIDIA are in our portfolio. So again, over 5 years, we're more than quadrupling the S&P 500. And Broadcom's been in our portfolio for a long time. And we look at a stock like NVIDIA, which is up, 100% in the past year alone. This year alone, 2024. And there was one of the money managers on one of the TV shows, and he says he's looking for a pullback in NVIDIA in order to buy it. Well, folks, we bought it over 4 years ago, and it's been it's up over 2,000% over that time, over the past 5 years. So yeah, it's doing very, very well, and so is Broadcom. Now, this is what I want to show you once again, that the ETFs are now, or our new program is saying or telling us which ETFs these stocks are, or any stock is. And we are looking at the XSD, which is a semiconductor, because we hear of Broadcom all the time. We hear of NVIDIA all the time. We hear of some of these other semiconductor stocks that are doing so great. But we go over our portfolio all the time, and we're finding a lot of semiconductor stocks that are not doing very well at all. Now, let's look at how this ETF is doing against the S&P 500. So, again, this is actually the past 1 year. So this 5 years is wrong. We are looking at 1 year with Broadcom up about 68%, the S&P 500 up a tad above 30%. But here is the ETF, the semiconductor ETF. And we just want to show you that there's a way of telling which are the above average stocks, and that's the clean surplus analysis, and that's part of the chart that we looked at in our computer program. Tells it all, folks. So you can identify the above average stocks, and if you can't identify the above average stocks and outperform the S&P 500, you might as well own the S&P 500, because a lot of you are in the semiconductor ETF, and it is underperforming the S&P 500 over the past 1 year. Again, this is wrong. This is not 5 years. This is 1 year. And we pick stocks like Broadcom, which are above average stocks. We pick stocks like NVIDIA, which is up about 190% this past year alone, which would be way up here. So that's what we are able to do. So you have to be careful of semiconductor in ETF, because there are so many stocks that are not making a lot of money or making any money at all. And unless you go over 1,000 stocks a year, you'll never find those stocks, and you don't want to find them. But if you buy the ETF itself, folks, you're buying those below average stocks. That's why this ETF for the semiconductors is way below the S&P 500, and that's why our portfolios, especially the top stocks in the QQQs, which is the NASDAQ 100, our portfolio of 12 stocks is doubling the S&P 500 for this year alone. So, folks, yeah, there's a way to outperform the S&P 500. And remember, over any 10-year period, 96% of professional money managers cannot outperform the S&P 500. And, folks, you following us, you're part of that 4% that can outperform the S&P 500. And I don't think any of that other 4% are outperforming our portfolios, or we certainly, and you certainly, would have seen it or heard about it. But here we are, folks. And yeah, we had an unbelievable couple of weeks with the election. The market was up with some indices up 5%, other indices were up 2.5% to 3%, and now over this past week, the market is kind of readjusting itself, and that's what we're looking at right now, is what is the market going to do going forward. But remember, we're coming into Thanksgiving, we're coming into Christmas, so we're coming into a holiday season where usually the market does very, very well. So let's get out here this weekend, go walking on the beach, walk on the golf course, get some exercise, have Sunday dinner with your family. Gee, that would be nice. And folks, you go out, you be safe, have a good weekend, and we'll see you back here in a couple of days. Stay safe, everybody.